Across Europe and Asia, the computing footprint is expanding. Every new data center requires a significant volume of copper for power and cooling infrastructure. That tech-driven demand is compounding with global energy transition programs as electrification initiatives continue to scale their hardware requirements. This chart shows the projected supply curve for copper in 2026 remains flat, while demand follows a steep upward trajectory. This environment keeps prices high and has institutional capital seeking stable, large-scale exposure to the metal. Meeting this demand is difficult. Building new megamines in remote locations often involves logistical hurdles that result in multi-year delays and budget increases. In Zambia, Africa's second-largest copper producer, Barrick Corporation is attempting to address this gap with a $2 billion commitment. The objective is the Lumwana Super Pit expansion. The goal is to double processing capacity by early 2028, aiming for a peak design of 54 million tons per annum. Executing a build of this scale deep within a landlocked country requires navigating significant physical and logistical complexities. The Lumwana expansion is a test case for whether a major mining company can deliver a complex infrastructure project in this environment on its original timeline. Reporting for the first quarter of 2026 indicates the project has transitioned from civil preparation and earthworks into above-ground structural construction. Engineering milestones achieved this quarter include the initial lift of the mill building wall and the delivery of the mill shells to the site. Financially, capital expenditure for the year is currently tracking at the lower end of the $750 million to $850 million guidance range. This phase of construction typically indicates if a project will maintain its schedule. For investors, consistency in cost and engineering during this transition is a metric used to assess the risk of future delays. Managing the construction is complicated by the fact that the expansion is taking place without halting daily mining operations. Q1 metrics show that current production was 11% higher than the previous period, reaching 49,000 tons of copper. This dual-track efficiency is supported by a heavy reliance on the domestic Zambian industrial base. Since 2019, the mine has contributed $4 billion to the Zambian economy. 79. By 2028, output is expected to reach 240,000 tons annually, which would extend the operational life of the mine to 2057. A project of this size functions as an industrial anchor, requiring the development of permanent national infrastructure. The build facilitates a new power framework with ZESCO, the development of Menyama Township, and a TVETA-accredited training center to expand local skills. These parallel investments create an industrial platform that remains in place even as resource cycles fluctuate. The next test of this execution comes at the end of the second quarter, when the first loads of structural steel arrive on site. Lumwana serves as a case study in how local integration and cost discipline translate large-scale capital into the copper supply required for global infrastructure.